Hello traders, welcome to High Fund Forex. My name is Regan here at Elevate Your Trading Scale. You are in the right place to put you in the 10% who always profit in this Forex market every day, in this financial market, to elevate their finances and then gain the skills as well. I feel glad to everybody watching from wherever you are listening from, wherever that you are watching from. I send my greetings to you. You are the people who give me hope in doing this. You are the reason as to why I'm doing this. Today we're going to talk about the power of the MACD, trading breakout. You might be there and wondering how you can go and trade in a breakout. After a breakout, you might be wondering, how can I enter in the market recognizing the right breakout? Many traders out there, they lose money trying to catch up a breakout. You try to catch a breakout, price comes back down and then takes you out. You try to catch a breakout, either buy or sell, price comes down and then takes you out. But in doing so, you keep on losing money consistently, just like that, unknowingly. But here today, I'm going to show you how you can utilize the MACD to identify the right breakout. Many custom indicators are available on MT4 platform, and a MACD is one of the custom indicators that have been around for a while. It's the moving average converging diverging indicator. A MACD is just its abbreviation. Let's go down and we can see. Let's go down and see how you can utilize the MACD and utilize its power to identify the right breakout. Let's go down to the chart. We're going to be using the USD JPY chart. It's going to be the H1 time frame. I like to backtest the U on the USD JPY pair due to its volatility, due to its high sense. Let's go down in front of us here. It's a chart. Let's first identify a consolidation. It's the reason that's why I need to identify a breakout. A consolidation refers to a moment where price is moving, creating highs and lows that are at equal or relatively equal same levels, or at equal levels. That identifies a consolidation, a whipsaw, or a ranging market. All this range here, at this level here, this average highs and lows, all these average highs and lows we see down here, over here, price moved up, touched all this level here. Price moved up, touching the previous upper. You can define it as your support, you can define this as your resistance up and down, but all this zone here is considered as a ranging area. All this zone here is considered a ranging area. So in this scenario, as a trader, this is where you need to identify such a ranging market. And if you would like to take a trade after a breakout, you are encouraged to use the MACD. And down below, this is the MACD. Down below is the MACD indicator down below with its custom settings. And then the blue is the exponential moving average. In the previous video, we discussed how you can utilize the power, the capability of the exponential moving average at 200 period by utilizing its capability in determining trend direction, volume, consolidation, relative strengths in the currency pair, so that you put that in your arsenal to elevate your technical analysis. This is all this area we see over here. This is considered as a whipsaw. As a trader, you are not encouraged to trade during such an environment. You need to be out of the market and you need to wait for a breakout. You might be wondering, how can I go into the market and then identify a correct breakout? So let us utilize the MACD in several examples with several pairs so that we can see how we can utilize this. This is an area where price is bouncing off, creating lows and highs, at hitting relatively the same level. This zone marked here, this is a ranging area. You are not supposed to trade during such a ranging area where price is bouncing off. As you can see down below here, this was a fake breakout, fake breakout, fake breakout. Down here, let me mark it. Let me mark it. This was a fake breakout. This was another fake breakout. As a trader today, we are here to take out this. To take out this fake breakout so we can recognize a correct breakout. If price, let's go forward. As you can see, price continued ranging in the same area. Price continued ranging in the same area. Price continued ranging in the same area. We need to keep our watch on the MACD down below. But as price broke out, as price broke out at this area here, if you look closely at the MACD down here, we're going to look closely on the MACD. The MACD down here crossed. The MACD down here crossed below. It turned out to be negative. When the MACD is up, it is positive. When the MACD is down, here it counts negative. When the MACD is up, it is positive. When the MACD crosses the zero line, it is negative. The MACD has a zero line in between. The MACD has a zero line in between here. We can make that. The market always has a zero line here in between. It has a zero line. Whenever the MACD bars are down, the MACD is down, and whenever the MACD bars are up, the MACD is negative. So whenever the MACD crosses negative and then turns positive without the pullback touching the exponential moving average, that indicates volume fast. And the fact that the market is crossing up back to positive, that indicates a continuation to the upside. Therefore, all this scenario here indicates a continuation to the upside, therefore indicating a breakout of this entire consolidation right here. As a trader, this is how you can identify a breakout in the breakout with the MACD, since price was ranging previously, as you can see below here in this white market area. Then price broke out, but as price broke out and then pulled back, it never touched the exponential moving average, implying volume. We discussed this in the previous video. And as the MACD was negative, below here, as the MACD was negative, let me zoom in. As the MACD bars were negative, indicating a pullback still, and then turned out and then crossed back up the zero line and then turned to be positive again, and price never touched the exponential moving average. And then, matter of fact, price this pullback was above the previous area where price was bouncing off, and then getting back into the consolidating area. That implies a breakout. As a trader, this is where I need to come in. After the market crosses above, gets back to positive, entry here, stop loss below the pullback, target 1 to 2. I always encourage the 1 to 2 risk to reward ratio to monitor your win rate, the losing streak, and then the winning streak as well. Let's go to example number 2. To elaborate more, we are still utilizing the H4. This is a H1 time frame. We are using the USD JPY chart. This is another clear example over here. As price was doing all this range here, as a trader, it's hard for you to make money in such a ranging area like this. Where price is ranging, in such an area where price is just ranging all like this, bouncing off, then coming back into the same zone, bouncing off support, bouncing off resistance, ranging without direction. All this area is very hard for you as a trader to make money. All this area here is hard for you to make money. bounce off, bounce 1, bounce 2. This was a poor rejection. This was a fake breakout here. This was a fake breakout. This was a fake breakout over there, and that's what we need to eliminate. That's what we need to eliminate. And even down below here, this was also a fake breakout. Even below here, this was a fake breakout. This is what you need to eliminate by utilizing the power of the MACD. And so let's go ahead and continue. We put our eye on the MACD. Down below here, you put our eye on the MACD. Let's continue to move on with price. As you can see here, in this area, of the MACD, here, let me zoom in. As you can see in this area here, the MACD bars turned negative and then crossed back up and then crossed back positive, confluence number 1. Then price pulled back, made all these pullbacks and never touched the exponential moving average, implying volume. Price is trending above the exponential moving average, implying bullish direction. So our bias is right, just bullish. Then price is still trending above. Then price still is trending above all this breakout. Another confluence. So all that confluence is all put together to confirm the entire criteria. A price at this pullback, when the MACD crosses back again to positive, with all the confluences mentioned below. Entry here, stop loss below, target 1 to 2. That's a decent trade. It's one of the trades that we are caught recently. Let's go ahead and continue with another clear example. Yes, another ranging area here. Let's see how we can utilize the power of the MACD by utilizing the strategy. Let's continue here. As you can see here, price was bouncing off. Pricing was ranging. Price was ranging, and then lately created a fake breakout. Which is here. Let me show it. A fake breakout which was here. This was a loss. Then another fake breakout. Which was here, which was also a loss. But utilizing the MACD power can help us to indicate the right breakout. Let's go ahead and continue. We put our eye on the MACD down below to mark the correct breakout. As you can see here, price started creating decent lows and highs, decent lows, and then impulsive moves. As you can see down here, since the trend is trending below, here we look for the MACD to turn to be positive. Then if it crosses back to negative, that's the entry. That's the time for us to sell this market. So in this scenario, the MACD turned positive. The pullback turned. These impulsive moves. The price pulled back but never touched, just close to the exponential moving average, implying availability of volume in this trading pair. That's another confluence. Confluence number 2, confluence number 3. Price was lately followed by bearish candles. We don't catch reversals. We wait for further confirmation. Therefore, implying that it's a clear entry. It's a clear time to put our money on. I always encourage you to put 2%, not more than 2% on each trade you put on. There is nothing like 100% winning strategy over there. So, entry here, stop loss above the pullback, target 1 to 2. The trade was called target 1 to 2 to monitor the win rate. Let's go ahead and continue to another example. Wow, over here price was ranging in this scenario here, and then creating fake out breakout. Let's continue here. So in this scenario here, the areas that I've marked, price was creating lows and highs in the market structure, but they are all bouncing off in a relatively the same area, ending up creating a consolidating area without any indication of the right direction, due to the fact that price is creating the same lows and highs, bouncing off the same relatively same area, ending up creating a consolidating area. As a trader, this is where I need to come up and then step back and then wait for a right time when your system aligns all together. So in this scenario, price first created a fake breakout. Let me highlight it here, a fake breakout here. Price created a fake breakout here, which was fake. You didn't need to be here. You were not supposed to be here. But then lately, price broke out of the ranging zone. We had to wait for a confluence, for a correct pullback. This pullback here, it was good, but need to wait for the system. You had to wait for the market to give us a clear signal to increase the win rate of the system, to make sure we trade directly right with the system, with the strategy, to be very systematic. So in this area here, the MACD was negative. As you can see here, the MACD was negative, crossed down below and then crossed back up. Price was far away from the exponential moving average with its pullback, indicating the availability of volume in the market. Conference number 2, price out of the pullback, price is trending above the exponential moving average 200, implying bullish trend direction. So in this scenario, our bias is long. With all those 3 confluences, we are ready to go long. So entry here after the MACD crosses back positive with the positive bar. That's why I go long and buy the USD JPY. Entry here, stop loss below, target 1 to 2, target 1 to 2. Entry here, stop loss below, target 1 to 2. I always encourage you target 1 to 2, monitor the win rate and then the trading psychology. The more the losing streak, when you are targeting higher profit target, it creates a strong losing streak that you cannot handle as a trader. So I always encourage you to target reasonable profit targets. And let's go to another currency pair, which is the Euro USD. Euro USD down below here. Good. This is a Euro USD, the most heavily traded currency pair, and which that means it's good to test our system. We see if it has its positive effect, creating good results on the Euro USD. H1 time frame, the blue moving average is the 200 exponential moving average, whereas the MACD with its custom periods. Below here, it's this is an area. Below here is an area where price was creating impulsive moves, pullbacks, but bouncing off at relatively the same area. Let me mark out this zone here. Price was bouncing off the same area, up and down, indicating no direction. This, when price starts to bounce off back and forth in the same relatively same area, that implies a ranging market. Price is in the bounding situation. You do not need to be in such a trading environment. It's not favorable at all. You are not encouraged to trade the ranging market. The ranging market is very deadly. It just applies more risk into your account as a trader, and it's hard to endure through this psychologically when price starts to go against you. So price created a fake breakout here. Price first created a fake breakout here. Let's highlight that. Price created a fake breakout here before it continued up, and this is what we need to ignore. It's the lesson that we are learning today. Ignoring fake breakouts and then patiently waiting for our system to align all together. then we get into the market at the right time, at a perfect time. Trading your system perfectly is the right thing that you shall ever do to ensure your profitability. You don't even need to be lucky when you are trading your system all right together. So if you put our eye on the MACD, the moving average, converging, diverging indicator down below here, let me highlight it a little bit. Price at the MACD buys turned negative, as I told you. The MACD has a cross line, has a zero line, which is in the middle of these bars. When price trends above the MACDs, the bars of the MACD, when they're above the zero line, they will be positive, and then when the bars are trending below the zero line, the bars will be negative. The positive bars imply positive, implying bullish in the market, whereas the negative bars implies bearish, implying downward in the market. So when the market turned negative, implying to this pullback, the pullback was far from the exponential moving average, implying the availability of volume. Conference number 2. Conference number 3, price was followed by bearish candles. The MACD turned out to be positive, lately implying the clear time to enter the market on EURUSD to go long, since we are anticipating in a bullish market. So entry here, stop loss below the pullback, target 1 to 2. Let's go to another example. Good. This is a ranging market over below here. It was a clear squeeze. This squeeze is very deadly. This squeeze here is very deadly. This squeeze here is very deadly. It can kill your psychology as a trader. It can kill your psychology as a trader. This squeeze here, I don't encourage you to trade during such a very tight area like this. It is very deadly. To scalpers, it is very deadly even more. To scalpers, it is very deadly even more. That's why I don't encourage you to trade lower time frames. More so, if you want to insist and then trade a lower time frame, there are very many things you need to look into, because trading a lower time frame is very hard. The lower time frame you go, the lower you go in the forex market trading a lower time frame, the harder it is for you to imply the trading psychology, the system, and then they take this in, and then the money management as well, since price is very volatile and then moves very fast. So this squeeze here was identified, and then if you look closely, price is just bouncing off the same area, relatively not indicating a clear direction. Not until the price broke out. Not until the price broke out in this area here. Not until the price broke out here. When price breaks out, that's when we put our eye on the MACD. That's why you put our eye on the MACD. And then as the price continues, and then the MACD turns out to be negative, and then the MACD turns out to be negative. Then the MACD was negative below here. The pullback moved. Price is still ranging. Price is still trending above the 200 exponential moving average, implying the same direction, which is long. And then still price is still trending a bit far away from the exponential moving average, implying availability of volume. Explain this in the previous video. You can go ahead and check in the list, the playlist, the videos there about volume, about searching volume and then using exponential moving average to determine and then track volume. So all that confluences all added up together creates a clear setup, creates a clear system, a clear buy signal to go long in EURUSD. Entry here, stop loss below the pullback, target 1 to 2, decently hit. Let's continue to another. Oh, wow. Oh, this choppy area below here, price was bouncing off in relatively the same area above here, up and below. Price is just bouncing off relatively the same area, ranging through the exponential moving average. All this implies poor volume, implies no direction. That's what price is taking. That's what price is talking. You need to pay attention to the market structure. You need to pay attention to the market structure. You add price action, market structure, technical analysis by the indicators to create a clear, firm confirmation, to avoid dilemma, to avoid paralysis in the analysis of the market. So in this area here, price was ranging back and forth in relatively the same area, creating fake breakouts, on and on, ranging in the same area. But as to you as a trader, because as to you as a trader, this is what you need to identify and then eliminate it. And one of the ways you can eliminate it is utilizing the power of the MACD. And here today, it's what we are talking about. So you see, as you can see here, this is a fake breakout, another fake breakout here, another fake breakout here, another fake breakout here, another fake breakout here. So as price trends out of the breakout area, you pay your attention close to the exponential move. You pay your attention close to the MACD, the moving average converging diverging indicator down below here. As price continues, as you can see, the MACD bars here, the MACD bars turn positive. They were above the zero line. Below here, as you can see, the MACD was positive here, closing above the zero line. Price pulled back. That's conference number. This is conference number 1. The MACD crossing above, then price pulling back, not touching the exponential moving average, conference number 2. Then price is far away from the exponential moving average, implying availability of volume in this market, implying matter of fact, price is showing clear lows and highs with a good impulsive move. This is a clear area for you to put your money on. So as you wait for the market to cross back into the negative, since you are anticipating in the bearish trend, wait for the market to cross back below or to be negative with the first bar. That indicates a clear entry for you to go short in this pair, in this situation. So entry here, stop loss above the pullback, target 1 to 2, which was clearly hit. Thank you for listening. Thank you for watching. My name is Regan. I always encourage you to follow the trend. I don't encourage reversal traders or the utilizing of reversal tools. Not at all. Put your risk management in place. Please trade psychologically stable. Trade systematically to be in line professionally, and then collect profits from the market. My name is Regan. This is Hyphen Forex. Please like and subscribe. You are following, your buys, your presentation, you are listening, you are watching, keeps us well informed, and then keeps us with the efforts to continue to deliver more information to elevate your trading skill. Happy trading.